Thank you for joining us this fine Tuesday for the Cannabis Connection weekly webinar series. I am your host and the CEO and founder of Cannabis Connection, Jamie Cooper, and today I am live with Karina Miller, the owner of LC Solutions Michigan, and we are talking about setting up your accounting system in response to 280E. Karina, thanks so much for being here today. How are you?
I'm good, Jamie. Thank you. Thanks for having me and for hosting these. How are you doing?
Pretty good. I just don't see your camera. There is a camera icon that might have a little red X through it. Just click on that, and we have some people coming through the room. If we can't get your camera on board, no big deal at all.
Okay, I clicked on it and it says you can't start your video because the host has stopped it. So,
oh, lovely. Gotta love technology. Let me see if I can fix that while others get into the room really quick. All right. Got several people in the room. Okay. Okay, maybe that works now. See if that works.
All right. Oh, now it's taking me through.
There we go. There's beautiful Karina.
Hi, everybody.
Okay, here we are. Okay, Karina, tell us a little bit about yourself, your background, and LC Solutions Michigan.
Sure. So my name is Karina, like Jamie said. I've been a CPA since 2011. I started LC Solutions in late 2016, right around the same time that we went forward with the commercial laws here. Reason I started, I have a personal passion for the industry. It was kind of a way for me to tie accounting skills that weren't really too interesting until you get to apply them to this industry. So that's really why I'm here. And then today we're going to talk about 280E and how to set up the accounting system around that. Should be something that every business owner in this business is aware of. So should we get started?
Let's get started. You know, I would love to ask what 280E is, and I know that you're going to tell us exactly what that is.
It's in here.
Yeah, I mean, it's people like I was working with a client who he was like, man, how is 280E going to affect me? And I was like, I know the person who knows.
Yeah. So. It can be a scary concept based value, but it's really not so bad, like we'll talk about today.
Okay.
So, all right, well, let's get started. So preparation, set up your accounting system. So I had a hard time at first thinking about, the best way to go about this presentation. Really when you get into where you're setting up the nitty gritty in your accounting system, you should be working with a professional. It's not something that you want to do on your own, especially if you don't have any, accounting experience or really know, accounting in general. So the first step to looking at what your accounting needs will be as a business owner is planning and preparation. So a lot of times business owners, they'll get everything ready and then they'll leave accounting until the last minute. It's not something that's needed today, so it's kind of pushed on the back burner. And you really want to plan for accounting needs up front. Even if you don't, day one go forward with a full-fledged accounting system, you want to be thinking about it and tracking your costs and not saving all those things until tax time. So here are some steps that you can take to be successful. And again, I tried to build this in a way where you can prepare to even have a conversation about accounting and just have some of that general background knowledge. So it's easier and you understand it better when you get to it. So first, be aware of what 280E is. If you are operating in the medical marijuana industry, 280E affects you. There's no ifs, ands, or buts about it. So as a business owner, you do need to be aware of what it means. So it was enacted in 1982 by Congress, and what it says is no deduction or credit shall be allowed for any amount paid or incurred during the taxable year in carrying on any trade or business if such trade or business consists of trafficking in controlled substances, while marijuana under federal law is a controlled substance. So that this is why 280 applies to you. it was enacted actually, in response to it was a cocaine dealer actually, and he was writing off all his business expenses and claiming his taxes and doing all these things. And the IRS said, wait a minute, this is an illegal substance. This business owner shouldn't be allowed to take all these deductions as if it were a normal business. So that's how this came about. And unfortunately, marijuana is still classified as a controlled substance. So here we are under 280E. Now, at face value, this seems scary because you think off the bat, oh my goodness, none of my costs are going to be deductible. Well, there are some costs that you can take. So not all costs fall under 280E. So the next part of the report that Congress put together when this had come out says all deductions and credits for amount paid or incurred in the illegal trafficking listed as a controlled substance are disallowed. To preclude possible challenges on constitutional grounds, adjustment to gross receipts with respect to effective cost of goods sold is not affected by the provision of this bill. So what that means is cost of goods sold are the costs that you're putting out there to make your inventory ready and available for sale. So the reasoning behind this and not wanting to challenge that is really what you're doing is you're making an investment in your product. And when you sell that product, you're getting a return on your investment. So it's not really an expense. It's a cost that was required to produce or make that investment so that it could be sold. And that's why they don't want to challenge that, because obviously that gets a little bit deeper than what tax code may be allowed to do. It's a constitutional right. If you're paying for something and then you sell that, you get that money back, at least for what you paid for it. So, that's a broad understanding of 280E. As a business owner, really your job is to just be aware of that. I can't tell you how many clients we've even spoke with that are currently operating even an existing dispensary, and they really had no awareness of 280E. And I think, if you're going to be in this industry, there's really no excuse not to at least have a general understanding. So you're watching this webinar, you've got it covered here. And even if you want to do some quick Google links, if you need a little bit more help understanding it, but you don't need to go into detail. That's what a CPA is for, but just have a basic knowledge. Also know that, your business will be subject to it for federal taxes. And then not all expenses are disallowed. Certain deductions, or they call an adjustment to gross income, would be your cost of goods sold. And those are allowed. Before I get too far, I want to touch on last week's board meeting where this was discussed. One of the applicants, the board members were discussing that they had taken depreciation as a caregiver and that wasn't allowed. Well, the board members were not fully aware of the full concept of 280E. So if you are taking costs that are in line with what can be considered cost of goods sold, then yes, they are allowed. And that's what that applicant had done.
Yeah, it's pretty important that our board members are pretty aware of 280E when they're making these decisions. So, hopefully they're getting some lessons on how this works and what it means for these licensees.
Right. Let's hope maybe they're watching.
Right.
So next step is to be aware of your business workflow and what types of financial transaction it's going to have. When you're looking at talking with a CPA or planning your accounting needs out, you really need to understand as a business owner what your processes are and how your costs are going to flow through, and what the detail level behind, I'm just going to go buy supplies and set up a cultivation area. You really need to think about, at what step in the process each of these costs get incurred. And then another thing is the whole entire layout of your facility. So when you're applying 280E and different concepts under it, there's areas in your building that you will be able to deduct, and then there's areas that you won't. So you need to have, to have an intelligent conversation, you need to at least have a general understanding of where these different activities will take place within your facility and what all is involved. So step 3, talk to a CPA. So I put this one as number 3 because, again, I think a business owner should at least be aware of these concepts in general before they take that next step. Then you can have a good conversation with a CPA. You want to be able to get more into just the basics, or more into, what you could, type a couple keywords into Google and find on your own. So it's helpful to have that just basic background knowledge. So once you get to that point, your CPA can help you get into the nitty-gritty and start determining what costs fall under those cost of goods, or cost of goods sold once the inventory is sold, and that you would be able to deduct those for tax purposes. They can help you understand the specific consequences of 280E. So, if you're looking at a business projection, or trying to plan out what your accounting structure will look like as you start, that your CPA should be able to say, this cost is deductible, this cost isn't, and then give you a good estimate of what the tax effect would be because of that. And then they can, obviously help you plan the next steps and how to implement your accounting system. And, right here I say, if you have accounting knowledge and you're gung-ho about this and you're confident 100% that you've got this, then by all means. But, most business owners, you should be working with a professional at this point. To try to set up your accounting system in response to this and not have accounting knowledge really is just kind of going to create a mess, a fixable mess, but not another complication you want to add to this entire process. So, and then I kind of went into this. These are more steps of what you would work with your CPA on. Some of this gets into very detail, but I also wanted, to give an understanding of what all is involved in when this accounting system setup takes place. So the next step in your process would be, you want to make sure you have a list of all your expenses, the types of transactions that you're going to occur. You could have an estimate, if you haven't started yet, or if you are in business, you'll have on a monthly basis every type of expense that the business is going to experience. So then you need to separate out these costs into what can be considered cost of goods sold, and then what would be better termed as, they're called selling, general, and administrative expenses. So we call them SG&A expenses in the accounting world. Those types of costs are not deductible under 280E. So when you're doing this, and when you have your system set up on the back end, you're actually going to almost have 2 sets of books you're keeping. It'll all be within one, but you're going to have separate accounts for costs that fall under cost of goods sold, and then separate accounts for those that are the SG&A costs, like marketing expenses, or if you've got a receptionist in your front office, things like that. And again, you want to work with a professional, a CPA on this. It's very detailed, the types of costs that could be considered cost of goods, and that's really where the expertise comes in. Is you want to get as many costs as are allowed under law into cost of goods sold, because that's what you can take as your deduction.
Now, does this applies mostly to those that are actually handling the plant?
Correct. So we've determined, we know it applies to cultivators, processors, and provisioning centers. The issue with the secure transporters and the testing facilities is it's really never been brought to the IRS yet to put a tax return through and see what their stance on it is. Our stance here, we've talked to other CPAs about this and other tax professionals. Our stance here is a testing facility most likely would not be subject to 280E, because they can test other types of substances. 2, the testing is required by state law. It's a necessary component of this. So even if they were subject to 280E, those costs are necessary to get that product ready to be sold to a patient. The same thing with a secure transporter. Now that one's a little bit more tricky, because the transporter is actually moving the goods back and forth. So that one will be very interesting, how it, when we submit our first tax return for a secure transporter, what actually will play out with that. And hopefully there will be some more guidance from the IRS or other references we can source in the meantime.
Thank you.
No, you're welcome. So next you go into very specific detail of what costs are considered cost of goods or cost of goods sold and which aren't. Again, you want to work with a professional. If you want to attempt it on your own, I did include some resources on here. So there's other IRS codes that you would reference as you're trying to determine what is and what is not allowed under 280E. The IRS code is very detailed. Usually a code section would get added if an issue were to come up, or changes to the tax law, things like that. But sections 471 and 263A both talk about inventory costs and what costs would be included in inventory. So those are good sections to reference to try to determine which costs are deductible under 280E. Some other, there's a lot of accounting guidance out there that's industry specific, not necessarily cannabis industry specific, but you get into agricultural industries, manufacturing, pharmaceutical, retail. There is guidance out there for how to treat costs, how to classify your equipment, different things that would go into your accounting records. And then, of course, there's tax court cases that do set precedent in this industry. One of the first ones was Champ, and I think that was a good example of what could be deductible under 280 and what wasn't. There's been a lot of tax court cases since. There was one just last October that touched on the subject. I think there was another one that was filed in late December or January. So there is guidance out there. You just have to know where to find it and look for it. And then my favorite piece of guidance, and one that really wouldn't hold up in any even in the IRS's case, is a memorandum that they published back in 2015. And this a CPA for a dispensary out in California, I believe, had wrote in to the IRS and asked them the question, what costs can they deduct and what can't? So this memo is 8 pages in the IRS's words of what they felt were appropriate laws to follow, and what tax code sections to go from. The issue with that memorandum on the IRS's side is it's not authoritative guidance, so it would never hold up in a court of law. It was almost like with Lara reviewing the applications, they have all these different levels of reviewers. Well, if the initial reviewer were to issue an opinion on the applicant's application, it really wouldn't hold up. It wouldn't have any weight by the time it's discussed by everybody else. So this is kind of similar, but it gives you an idea what the IRS is thinking along these terms. So for each type of cost, especially cost of goods, you want to have justification of why you're saying that is a cost of goods sold. So you would either refer to some of this guidance, refer to, if you've got experience as a manufacturing accountant, maybe already what goes into cost of goods sold. You want to make sure that your decisions are well supported and documented.
Right.
And then here's just some common, what are considered cost of goods. And I've got the S in parentheses because they're cost of goods sold. They're not deducted until it's sold, till the inventory is sold. These are just some common ones. So, you've got soil, equipment depreciation, direct labor, packaging. All those costs are going into making the product ready to get to the end user, the patient. Common costs that are not deductible, so these selling, general, and administrative type costs, again, are marketing, office supplies, things that are kind of ancillary that, yes, they support the business, but they're not directly going into producing your product. And then don't forget about shared expenses. So this is where it gets fun. So we've got where you've got rent, let's say, that covers an entire building. Well, part of your building is your cultivation rooms, and then you've got part that may be a conference room or a front office. So shared expenses like that have to be prorated, a portion to cost of goods and a portion to the general and administrative expenses. We'll talk about that one of the next steps. I've got a little more detail on that.
So just looking at this screen right now, it tells me that provisioning centers are likely the most impacted. Is that correct?
Correct. So there are some things, provisioning center, they're going to have the actual provisioning area. Then they're going to most likely have an inventory receiving area where maybe they're doing inspections or breaking it down into smaller packages. So those areas that are still where they're getting that product ready, it's not, you can't sell to a patient in a bulk package. You're going to break it down further, or maybe they have extra testing they need to do. Those types of costs do fall under 280E as cost of goods sold. So there are some expenses that they can take, but they're very limited. The notion behind that is, once the product hits the dispensary doors, it's ready to be sold to the patient.
Right. Whew.
I know it's a lot here.
But, okay, I want to ask this question. I'll go ahead and ask it now. What needs to happen to give us relief from this 280E? That's some legislative action on a federal level, correct?
Right. It would, marijuana would have to be descheduled by Congress. That's really what it is. 280 doesn't specifically say it's for marijuana businesses. It says it's for controlled substance businesses. So that's the reasoning behind it.
And this is why I'm a member of the lobbying organizations such as the National Cannabis Industry Association, where they try to lobby on behalf of businesses to provide some sort of relief federally for us in 280E, because this is, it's not fair, right. For us to be treated as if we're dealing cocaine. Right. This is cannabis, and this is helping people. Okay, thank you very much, Karina.
Right. Yeah, you're welcome, Jamie. Yeah, I agree 100%. So next we get into beginning the setup, and I know this is a lot, and this is there's a lot of preparation that goes before the actual setup can begin. So we talked about that you're going to be tracking these costs in different ways. So your first, I'll say the backbone of your accounting system is your chart of accounts. And what that is it's all of your accounts that you have financial transactions running through. So you would have an account for cash, you would have an account for your building, an account for revenue, expenses, all that. So when you're setting up your chart of accounts, those accounts need to include those different buckets for cost of goods sold and non-cost of goods sold expenses that wouldn't be deductible. So there you've got that. You've got where you're determining the shared expense allocations. So it's one thing to say, well, I know a portion of my building is cultivation and a portion is an office, but how do I determine what the best allocation method is? And then you need a process for ensuring ongoing bookkeeping and accounting. So a lot of times we'll see clients where they set up their system on their own and they have all these great intentions, and then they get busy and accounting isn't their forte, and within a couple months it's really not being used as often as it should, and receipts just kind of start to accumulate. So you want to make sure, if you're going to go forward with a true setup, that you're either working with somebody to do your bookkeeping, or you have an in-house person that is regularly accessing that system and making sure your accounting transactions are recorded. And then, you also should have an understanding of how accounting transactions relate to each other. So again, this takes where you need some knowledge on accounting on the back end, or you need to work with a professional. A big thing is the difference between cost of goods and cost of goods sold. So if you buy soil, let's say, as a cultivator, it's a cost of your producing your plants, but you're not able to write that cost off until those flowers are finished and sold. So you actually have different steps that you have to take to show those costs hitting your inventory before they become an expense. So you want to have some knowledge, of how these different transactions will flow together with each other. So here's just a basic chart of accounts, just so you can have an idea of what I'm talking about. if you're familiar with some of the more common accounting softwares, we use QuickBooks fairly often. You'll see in there that there's a basic chart of accounts set up, where you might be tracking cash or inventory, sales. Okay. Within a true setup, you're going to have a lot of detail behind all these accounts. So you may have 10 different inventory accounts that you're tracking, all your different types of expenses. So the most important thing, and this is kind of what I was trying to refer to on the last slide, is all of these costs that go into your product. What you're really doing is increasing the value of your inventory while it's still there. So you need to, within your chart of accounts, have all these, if you have an inventory account, make sure you have a counter account set up for cost of goods sold, so that you're able to show those transactions as they happen and how they relate to each other.
Get a CPA. Imagine doing this on your own without that knowledge and have been there, done that before.
Right.
So, kudos to you, Karina, for being so brave to take on this, because we need people like you.
Thank you. Yeah, it keeps it exciting. Definitely keeps accounting fun. So, right. So again, just more, and I don't want to get too technical with any of these things, but just be aware as a business owner, when you're spending money for these supplies and these costs, you're first spending them as if they're your inventory. So you're increasing that value. And all this will flow through to what you see on your financial statements that are produced from your accounting system. So it's important to make sure those transactions are flowing together correctly. And again, just more on the concept of, cost of goods, and when inventory is sold, that they become deductible. So then determine shared expense allocation. So what we usually do is request a copy of the entity's building floor plan. So you've submitted it to Laura anyway, and it should have the different space allocations laid out in blueprint format. And what we do is we take the full square footage of the building itself, and then the individual square footages for the different areas. We apply a percentage to those, and then those percentages are what we would multiply by any shared expenses. Some businesses may want to go into more detailed allocation methods. There's a few others out there that are commonly used if building square footage doesn't make sense for your business, but for the most part, that's a safe one to rely on. And again, if you are in a situation where you do get audited by the IRS, you want to be able to have this documentation to support why you took these percentages. So when we mark up somebody's floor plan, we have it color coded. We have all of our notes on there. So if it ever does get looked at, you've got that information to say, here's how I came up with it. And then ensuring an ongoing bookkeeping process. So, it's one thing to just, go into QuickBooks and just enter expenses as they happen, pull in your receipts as they happen. There's a lot more detail that goes into proper accounting. So you want to make sure that you're recording all transactions, reconciling your cash. You have a process for doing that. Maintaining fixed asset and lease schedules. So fixed assets would be like your building, any equipment that you're buying. There's a new lease accounting standard that goes into effect this year, so you've got to track your leases separately now. So there's a lot of back end detail and work that goes into this. And then, of course, keep all your source documents in case you do get audited. And then you should have somebody regularly going in there to make sure that you are staying in compliance with 280E. So even if you have all these accounts set up in the beginning, if let's say you get a shared expense in one day and your bookkeeper forgets to do the allocation, you want to make sure to at least have a second set of eyes looking at that to make sure that those 280E compliance steps are taking place and costs are being broken out appropriately.
Right. And how often would you suggest somebody to go in and review that and keep on track of it?
So it really depends on the size of the organization. If it's a large organization, ideally you're going to have somebody looking at it weekly. Depending on how many steps and people you have involved within your accounting department. For a lot of our clients that we work with, we look at it monthly if we're doing bookkeeping for them. If we're doing reviews for them, we may be looking at it weekly or biweekly. And then for someone who's just starting out, let's say you just submitted your application and you really haven't started operations yet, but you've been accumulating different expenses, maybe have somebody look at it every 2 months, or have that initial discussion with your accountant and start tracking your expenses. And then 2 or 3 months down, when you start to pick up a little bit more, maybe then have them look at it. I always say for those beginning stages, as long as you're tracking things and you're able to give it to your CPA in a logical format, they can set up those beginning balances for you.
Okay.
And then step 10, maintain compliance. So in Colorado, the horror story is that within the first 3 years, every existing dispensary got audited by the IRS. So, kind of go into this having that expectation that you're going to get audited. Doesn't mean it's going to be a problem if you get audited. What the IRS is looking for in an audit is to collect tax dollars that you should have paid that you didn't. So as long as your documentation is complete and you're within compliance of 280, not you don't want to take costs that you're not allowed under 280, but you've got a structure in place that shows that with good faith, good intentions, with reasonable knowledge, you're doing this as you or your CPA tells you it should be. There's some things you can do that if 280E never, became a non-issue, if cannabis was rescheduled. There's things you can do too that your CPA can help you with, that you can go backwards in time. I believe it's up to 3 years, and claim those expenses if you weren't able to take them before under 280E, and then redo your tax returns and be able to pick those up. So, you want to make sure you're keeping good track all around. You want that support. You want it to be there. The more detailed, the better in the accounting world.
Right. At this point, it's like it's too much information is never a bad thing.
Right. And it's, there's ways you can keep track of it. So again, this isn't a plug for QuickBooks, but these cloud accounting systems have where you can actually attach receipts to the transactions within it. So there's really no excuse to not have those things. The tools are available for you.
Right.
And then some other tips. So, get your seed to sale or point of sale system set up. That you don't want to wait until Metrc. I know some of them have different costs, where if Metrc's not live, they'll do a reduced cost. That's important, especially if you're an existing provisioning center. You need to have a point of sale system and not wait for Metrc to absolutely require you to have one. Those are great for tracking your inventory. They track the detail. A QuickBooks account is not going to track, let's say you make edibles. The QuickBooks isn't going to track your sugar and your chocolate and all these different things that go into it. It's more a high level for accounting. Well, your seed to sale and point of sale system will track these types of items. So they should be able to either give the accountant access or be able to download reports from the system from which you can do your accounting and bookkeeping from. And then choose an accounting system that's easy to work with. Things that are in the cloud are great. You don't have to worry about, software going out of style. You don't, they have the regular updates, and then you can collaborate with your accountant too. So we tend to use Google Sheets a lot too. It's an Excel based in Google, but we can get in there. The client can get in there. We can see in real time, any changes or accounting transactions that we may be doing, or if we're using them for schedules or things like that. It's a back and forth in real time. And then determine who's going to do your ongoing bookkeeping. So do not have someone who's not experienced try to attempt this. I've heard clients say, "Oh, we're going to have so-and-so dabble in our accounting records," and it gives me heart palpitations because it's, I know it's not going to work out. I mean, I don't want to discourage anybody from trying, but really this is something that you should leave up to a professional, or at least have some general accounting knowledge so you know what you're doing. And then again, don't wait till the last minute. So you need to work with a CPA for the attestation requirement. Get that done first, and then start talking about this detail for getting your accounting system set up. Again, even if you're just in those beginning stages, keep track of everything. We've got a couple clients that they don't track in Excel. They don't want to, but what they do is take a picture with their phone of all the receipts and things that they're doing, and then upload it to a shared folder. So there's a lot of different ways you can go about this. Just make sure that it's all there, and you're not scrambling at the end to say, "Oh, I don't know where this came from," or here's a hole here and we don't know how to fill it. So just make sure you have all your documentation and records complete and in order. And then, of course, work with a professional.
Absolutely. And we have a question really quick from Denise sure. Asking, should we use QuickBooks for manufacturing? So I'm assuming that means processing.
Yeah, you can use QuickBooks. There's different versions of QuickBooks. So you would need the Plus version, which allows for inventory. That's for anybody watching this. You need that version that includes inventory. So yes, you can use that.
Okay, thank you.
Welcome. So then here's just quick, some things we can help with. So obviously the 280E consulting and planning. A big thing for the provisioning centers is being able to lay out that space so they are able to take as many deductions as possible. So that's something that we can help with on the tax planning side. Counting system setup, with QuickBooks and all that, you as your client can get QuickBooks, but your accountant can also get QuickBooks too. And sometimes it's easier that way, because then one, you get a lifetime discount on it going through an accountant, but two, it allows the accountant to do that setup for you, and then you're not trying to piece things together and maybe not have it right in the beginning. You would still get full access to it. It's just letting the accountant manage that portion instead of you. Ongoing bookkeeping and review. So we talked about this during the slide. We do perform full bookkeeping services, and then also review services as well. So again, if you're a larger organization, you're going to want somebody internally doing your day-to-day bookkeeping, and work with a CPA on the back end to make sure that that accounting is being done right, and do the reviews for you. QuickBooks Pro Advisor services. So we do offer that. CFO services. So 280E is it's a great consideration here. Oops, but especially for especially once we start to get competitive, and the industry continues to expand, you really want to be looking at budgets and forecasts, and managing costs on a more detailed level. So that's where our CFO services would come in, and then of course the tax planning and the preparations. So, and that's all I have. Any
wonderful information. Guys, if you have a question, this is your time to ask Karina questions. You can do it by posting your question in the chat feature. You can press the Q&A button and submit a question. We do have a little bit of time to take any questions. Of course, there is Karina's email address as well. Quick question, back to, the board members, and you had mentioned, are there any protections for somebody who does get some sort of denial from the board because there's not a huge understanding of certain things and how exactly 280E works. Is there, like, will that client be able to go back and submit whatever information is needed to appeal that?
Right. So that client actually, they got approved, so they got through the process. It's about educating the board. So I'm actually going to be participating with the Michigan Association of CPAs on Monday. We're putting together a work group to develop accounting and attestation standards for the industry. And I believe Andrew Bisbell is going to be on that work group. So I'm really excited about that. And I hope just with the open dialogue and, really hearing from a CPA's perspective that this soon changes. Otherwise, when you ask about any protections, that, if somebody did say something that was untrue or falsified, then that would be, a legal issue. I think I lost you, Jamie.
No, I'm still here. Okay. I had to stand up. My camera won't turn back on for some reason. I had to stand up. There was a big group of kids that were walking by my office window.
Oh, got it.
And we have another question from Denise. Oh, it was partially. Go ahead, Denise, and submit the rest of your question, and we will get that answered. Okay. Is there a way so people can email you if they have questions, and there's the phone number. And Karina is very involved in the Cannabis Connection Michigan group that is on Facebook. And so if you have questions there, you can ask them. But thank you, everyone. I'm going to give Denise a little bit more information or time to answer or ask the question. But if you guys, thank you so much for joining us for our webinar. We will be here every Tuesday answering your questions on certain topics. I'm going to go ahead and share my screen really quick so I can show everybody the schedule. So this is our schedule for the upcoming month. June 12th, we are going to be talking with Amanda Kugler, talking about insurance for cultivators and processors. And then on the 19th, we will be discussing how to hone in on your top 3 marketing messages. That's from Heidi Grishel and Aaron Lumley of Ingrid Marketing. And on the 25th, we are talking with Ron Smalley with Vista Green Group LLC about tips for winning a cannabis business license. The latest, the next board meeting is I do believe the 11th of June, 9:30. So I suspect there will be more pre-qualifications coming down the pipe, and hopefully pretty quick we'll start seeing some full approval of licenses. But, I would keep up to date, get in that Facebook group, the Cannabis Connection Michigan group. That's where you can stay on top of the latest information coming from Lara. And okay, Denise asked, is my QuickBooks able to link with my accountant?
So yes, it is. You're able to invite an accounting user on there. So you would just send your accountant or CPA a link through their email address, and they would be able to log in and access your account.
Okay. And then thanks to our founding members, Karina is one of our founding members. The founding members are the ones that I interview and do these broadcasts with. We have THC 123, Bricks and Mortar, LC Solutions Michigan, Canna MediaWorks, Cola, Ingrid Marketing, National Cannabis Security Services, Vista Green, and ICS Consulting. I mean, these are some rock stars of the industry, and so grateful to have them. And if you haven't done so already, join Cannabis Connection. You can join for free. It's a free account. It gives you access to the online community. You can connect with some of the service providers like Karina that are needed to be successful. We are starting in July, the end of July, we are going to be launching networking events across the state of Michigan. We are looking at launching them in 10 different regions. And we are going to be hosting monthly networking mixers, like 2-hour mixers, where we can all come together together, build our businesses, build relationships, build our teams. You know, everybody kept saying to me over the weekend at CanaCon is like, we need more events where we can come together. So we are definitely working on getting that done for you guys. Also on Cannabis Connection, Karina's webinar will be accessible under the Learning Academy. That page only appears when you sign up for that free account. So all of our webinars will be in there. And then, of course, industry resources and insights. So make sure that you sign up for your free account. And it looks like we have one more question coming in before we wrap it up. Linda asks, will the PowerPoint slide be available for download?
So yes, I will post this on our website at lcsolutionsmichigan.com. And if you click on the tips page, I will get it up tonight, so it should be up there by tomorrow morning, and you'll see it there on the tips link.
Awesome, and you can send it my way, and I will make sure that everybody gets it as well, and we'll put that link on our website, redirecting to your website.
Okay.
So Karina, thank you so much for your time today. For you guys that attended the webinar, thank you for your time. And again, we will be here next week talking about insurance solutions for cultivators and processors. Until then, have a wonderful, wonderful rest of your day. Thank you guys.
All right.